What's going on, guys? If you come here to learn how to day trade, you are in the right spot. It is a beautiful day today, and I am thankful to be alive and to help you guys learn how to day trade today. So today, we're going to jump right into it. My name is Tyrese, and if you like this video, please smash that subscribe button and let's have some fun. So the main points that I want to talk about are uptrends, support lines, resistance lines, simple moving average 200, and cutting losses and not being greedy. I know that's a lot in one quick video. I'll try to make multiple videos on day trading, but let's jump right into it, okay? So the uptrend, when we're looking for day trading stocks, we want to make sure that the stock that we're looking at is going up, because what direction do we want our bank account to go? Wow, we want our bank account to go up, right? We all want more money, so why not invest in something that's going to make us more money? In the past, it's already making more money, right? We tend to look for patterns when it comes to day trading, right? So we want a pattern of consistency of going up, right? So I pulled up my stock here, TQQQs. It follows the NASDAQ, and I'll get deeper into that in another video. But right now we see a uptrend pattern. It is consistently going up. So what do I mean by support lines, right? So I would consider this to be the support, right? You see how recently right here, it bounced off here, and then as a trend of supporting off of around that area. Now, like I said, stocks have a pattern. We want to look for patterns. As you can see, there's this consistent support or bounce around this area when going up. So when looking at the future, we want to look for when it's going to turn that direction. Patterns don't have to repeat themselves in the stock market, but hey, it helps us when it comes to trading. And so the next line we want to look at is the resistance line. Where does the stock tend to have a hard time passing or increasing? Well, as you can see, this stock has a hard time increasing in a consistent way. So right now, would you feel comfortable investing in the stock, right? It is at a resistance. We have the support here, and we have the resistance. It is having a hard time breaking that resistance line. Last time it tried to break it, it fell back down. So would you feel comfortable investing in it right now? No, I would not feel comfortable investing in this company right now or in this ETF because it's at a resistance line. Now, like I said, patterns can break. They do not have to follow the same pattern every single time, but they tend to repeat themselves when it comes to the stock market. So we try to look for those trend lines. So you may be wondering, what is this big red line in the way? And that is our next topic, our next main point, and that is the simple moving average 200. This gives us where the stock is at in the past 200 days. So on average, this is the stock price in the past 200 days. And then this blue line right here that you see here is called the simple moving average, and that gives us the average stock price. All right, so when we go into day trading, like I said, we have our uptrending stock. We have our support line, which we can use the simple moving average 200 as a support line. That's why it's a good indicator there. And then we have our resistance line, which is an indicator of, oh, wow, it might be not a good position to buy because it's what we called overbought. And then at the support line is what we call oversold. So now, when we look at the intraday, we can look deeper into the stock and we can say, okay, at the 180-day level, well, it didn't look like it had a lot of possibility. It looks like it could be trending down here shortly. So we want to take caution when investing in this company if we're going to choose to invest in this company today, because we know it can have a tendency to sell off because it's at the resistance. So when we're looking at the intraday and we're going into day trade, we want to find something called a confirmation. So we want to find a confirmation that the stock is going to give us a high probability of making money. Okay, and confirmation, zoom in here, we have a green candlestick that is separating from the simple moving average and is above the simple moving average 200, and that gives us a little bit of confirmation. Like I said, the stock market is not 100%, but this gives us a little bit of confirmation like, hey, wow, we have some uptrending movement. Like I said, we want our stock to go up. We have some uptrending movement, which can give us a higher percentage chance of making money. So the next point is we want to be able to learn how to cut losses and not be greedy. We may have confirmation here, but it could not go to plan. So that's why we need the 2-to-1 ratio, right? If we're aiming to ride the stock up for 20 cents, then we need to be able to say, hey, if my plan doesn't go to plan, then I may need to cut losses at 10 cents. And another tip, if the stock starts trending below the simple moving average, the SMA line right here, it's a good indicator saying that it's probably not a healthy investment because it's falling below. And so that begins to become a resistance line as well. So we treat these simple moving averages lines as support and resistance lines to help us understand, like, okay, there's a possibility that we have an opportunity to make money when it's trending above these lines, right? Like I said, patterns tend to repeat themselves here, but they don't always have to. Okay, so those are the quick tips in regards to day trading in the stock market. You want to look for an uptrending pattern. You want to look for support and resistance lines. You want to use your indicators, the simple moving average and the simple moving average 200, to understand and try to predict where the stock is going to go. And you want to be able to set a 2-to-1 ratio goal. If you're going to invest in a company and you can be like, okay, wow, I want to try to aim for a 20-cent gain, then you need to be willing to say, hey, I should probably take a loss if it goes down 10 cents. And the reason for that is if you were correct 50% of the time, then you end the day with a profit. And that's all it is when it comes to day trading. We want to end the day with a profit. We want to be smart with our money. Guys, I hope you liked this video. I hope it helped you. If you have any more questions or if you want me to go into more detail into how I day trade, and let me know, I can go more in depth in a longer video.